Greg here. Welcome back to Weenie Trades. Right now, I got my weenie beanie on. It just arrived the other day. So, be sure to check in the description if you want to get a weenie beanie. In this video today, I'm going to be talking about the markets. We're going to be talking about the VIX, the IWM, the QQQ, and I'm going to be going over potential opportunities for this upcoming week. We had a pretty nasty drop on Friday on the overall market. So what that does is it increases the volatility and creates a lot of opportunities. So I think this can be a really big trading week. Be sure to pay attention and stay tuned in if you want to capitalize as well. So let's get right in the video. First up, we've got if you want to learn about SPY, go watch the Bears Win Turkey Day video. Long story short, we gave some key levels. In an extreme sell-off, look for the dip buy at 440. However, we could see a little bit of stability. It depends on how the futures opened. I have not seen the futures yet, so keep an eye on the futures. If the futures are absolutely destroyed and the market's down, hot and heavy selling, whatever it may be, oh well. But what could be happening is we could get a little bit of stability. Maybe if we sell off just a little bit more, I do think there's a little bit of a dip buy. The thing is, though, is if we get a kickback rally, the question is, do we go short or do I go short? So watch Bears Win Turkey Day for the SPY analysis. Nothing has changed over the weekend. But right now I want to break down the VIX. And boy, look at the VIX over here. Up 54% on Friday. The VIX is volatility and fear. And volatility and fear were very high on Friday. So the VIX over here, lower highs. And we got a flat bottom. There's a lot of congestion over here on the VIX. We kind of drew a little bit of a prediction. I didn't think the VIX would go much higher than 20. However, sometimes we just can't control when the market has a negative news catalyst. Just real quick, if we're going back to the SPY, if you made money short, great. If you swing traded short, great. I'm glad you made some money. The thing was, though, on Wednesday, there was no real signs to be short, in my personal opinion. Yes, maybe the market is a little bit overbought, a little bit overcooked. Yeah, there's a little bit of hints towards hot and heavy selling on the all-time high day that SPY made at 474, 473, whatever it may be. So those are hints, but really, I didn't see too much reason to go short. So if you went short, hey, congratulations. I'm glad it paid out. The thing was, though, is that not always does the market make sense. And that's why trading's difficult, meaning you can have the best setup. You can be positioned bullishly or, just in cash or not have any real hedge positions, and boom, negative news catalysts can unwind those short-term positions very quickly. And so diversification is pretty key when we're dealing with scenarios like that. We don't want to be an all-in on one thing. It helps to have a little bit of short positions or just being in cash. Being in cash helps to negate some of those drops. So keep an eye out on the SPY, and just remember that anything can happen in trading, and that's why we always manage our risk. So going back to the VIX, if it's still holding above 26, volatility and fear can be staying elevated. Now, what I think what likely will happen is that volatility and fear does what it normally does. Goes sideways and fizzles on out. Maybe we come back down into the 20 level on the fear. Maybe that could be a little short-term bounce, but trading the volatility and fear index, the VIX, is a little bit more difficult. I would say that I like to use the VIX as a hedge to other things. So maybe if the VIX is coming down to 20, maybe I can grab a VIX hedge. But really, charting out something like fear is a little bit more goofy than other things, but really good move on the VIX. Going up 58%, but notice how the VIX can really give back a lot of its gains. It would be nothing out of the ordinary for the VIX to drop 30%. So keep an eye on the VIX. Look for correlations between the VIX and the market and see if the correlation is strong or if it starts to diverge a little bit and we can get hints towards what might be next. So that is the VIX. Next up we got is the IWM, and boy, the IWM really gave back a lot of those gains. That's what a waterfall sell-off looks like. And if you've been watching the channel recently, I've been saying, hey, IWM, this is a really long consolidation period. Boom, we got the breakout. We got the breakout over what, 235? And I took that breakout, and it was a really good trade. I actually top-ticked it, 244. Did I know that 244 was going to be the high? No, but it was just a general good area to take some profits. And after I took those profits, I made a video saying, hey, I'd love to grab the dip on the IWM at about the 234 area. And why that? That's the former breakout area. We held that for a little bit and boom, Friday just clapped it all. So the IWM, I gave back all my gains. I gave back all the gains, but it's good to have at least gains beforehand. It just sucks that sometimes you can't keep all the gains in the market. And that's why trading is difficult, because there's these random black swan events that can happen most of the time on Thanksgiving week. Yeah, it's usually relatively stable, but sometimes the market at any point in time, it doesn't care about no holidays. Market can drop when market wants to drop. So moving forward on the IWM, if we're coming underneath, I'll call it 219, 220, that could be a liquidation flush. I think that is the less likely scenario. We'll see when the real volume comes in. Of course, Friday was definitely a high volume day, even with it still being a half day. So could the volume have doubled? Would we have rallied more at the end of the day, or would we have continued to sell off? We'll find out when we'll get a little hint when the futures market opens, and then we'll know a lot more at Weenie Trades Live on Monday. So underneath 220, that is bad news for the IWM. I do think that 220 should hold. You know, we're oversold into this wicked zone that has lots and lots of buyers stepping in. So extended into support generally calls for a bounce. Now on that bounce, if there's a bounce, we know we're probably bouncing if IWM's coming above 225. If we come above 225, look for us to probably test something like 228, 229. So 229, probably resistance 1 for the week. And maybe after that, maybe there's a little bit of a gap fill at about 232. So I don't expect the IWM to go much higher than about 232 this week. I'm not expecting it to sell off. However, just because I'm not expecting it doesn't mean it can't happen. We just got to keep an eye out for it and flip on the bear train if the IWM starts to break down underneath 220, or reevaluate. Sometimes shorting near the lows, it's kind of a risky proposition. It's the same as buying my shares at the top. So something to consider on the IWM. So next up we got is the QQQ Qs, and the Qs, you know, still looking at this prior structure, this old all-time high area, that's about, call it 382. If I zoom into something on the Qs like the hourly time frame, look at this support that we had right here. Clear level of support, call it 393.50. 393.50. We bounce from there. Yay, nice good bounce. Yay, double bottom? Well, it wasn't really a double bottom because we didn't break the top end of the range. So we coming back down into that area, held support again in the pre-market, and then on Friday during market hours, boom, flush. Now, the thing was that just retail selling, or was that big institutions and banks selling? Time will tell on Monday, but as long as the Qs are underneath 393.50, that is still an hourly downtrend, and it's likely to be resistance. If we get above 393.50, we could just chop and grind sideways to slightly higher and maybe test the top end of the range up at around 400 on the Qs. Hourly or daily above 400, maybe we could talk about new all-time highs. That's a little bit early though. Generally what happens on these sell-offs is it creates a lot of resistances along the way, and it's a little bit tougher to have those strong, just girthy trends, whatever it may be. I don't know if girthy was the right word, but hopefully you appreciated that. So that is the Qs. Otherwise, looking for that dip buy in this former breakout area, 283 to 280, call it. So that is the QQQ. So next up, I'm just going to be quickly touching on the game plan for this week, something to keep an eye out for, things to potentially trade, and Moderna is going to be on the watch list for day trading. Swing trading is actually a little bit more difficult. If you recall, I was trading one Friday and I was buying the dip on Moderna at 220 and I bought the dip at 212, and people were calling me crazy. Like, Moderna's going to zero. Well, that trade ended up playing out. Got a little bit of profits, but really could have swing traded it then all the way up to, I'm not saying I'd be perfect. I said my target was 288. There you go. That was a good swing trade on the lighter side of things. But now Moderna, what's next? Moderna, fat gap up. We had a good little pennant over here. So rally, bull flag, pop. So now we've already popped the bull flag. Sure, you could buy Moderna up here. If you do, your target's about 377 to 380. I would just caution against buying Moderna, mostly because we're extended into this resistance area. just as here we are extended into support, we get a bounce, extended into resistance, could get a pullback, go sideways to slightly lower. I am looking for Moderna to day trade. I might even take a short trade on Moderna if we're extended into 380. So keeping an eye out on Moderna for just great volatility. Oh, and hey, if you're looking for other potential trade setups, check out HUT. HUT's finally at a pretty good deal now, and it's had a pretty controlled sell-off. So earlier on HUT, nice good equilibrium. High, low, lower, high, higher, low, bull break. Bull flag pop. Now, over here, we're doing a little bit of a wedge type pattern where we're making lower lows, but notice how it's not just absolutely selling off. It's actually kind of holding support. And now we've coincided with this ascending support trend line over here, call it about 1220. And if HUT really starts to, break out, call it over 1250, that could be early confirmation that we could retrace at least a portion of this move. Maybe we get back up to like 1450, and that would be a great percentage return still, even if we could just retrace a little bit of that move. So keeping an eye on HUT, I'm setting an alert over 1250, and I'm also setting an alert over 13 for a potential HUT swing trade. Maybe, just based off quick retracements, these are just potential profit targets. You could target that 1350 as a conservative target. A regular target would probably be something like 1412. And I would think a stretch target would be that 1470 mark. And that's just Fibonacci's from the low to this high. So that's just the range that I'm looking at for HUT. Next up we got is Apple, AAPL. And Apple over here, big move higher, top ticked Apple at 165. There's no reward for catching the tops and the bottoms, but it's always fun to do it every once in a while. And on Apple over here, I am looking for a potential dip buy on Apple. Maybe if we come into the 155 area, I might be looking to sell put credit spreads, PCS, against that 152.50 level. Because even if we continue to sell off, we are likely to find some support at that 152.50 strike area. And we should see a little bit of a bounce and some buyers, some nibblers there that can at least potentially support the stock. So Apple, put credit spreads, 152.50 on weakness. You got to really be a little bit precise with your entries and understand the risk. If Apple tanks beneath 152.50, that's where the trade loses the most amount of money. But if Apple goes sideways or even slightly higher after that 152.50 level, you get paid. So those are my trade setups for the upcoming week. None of this is financial advice, though. I'm not telling you guys to buy or sell any of these options, securities, whatever it may be. I'm just trying to get your noggin working a little bit, and it helps to see what other traders might be seeing as they're doing their analysis. So if you enjoy hearing my thought process out loud in a goofy way, hit the like button. Next up we've got is NVDA, NVIDIA. And NVIDIA over here, boom, nice new high. I took my profits on NVIDIA at 330. I'm not really interested in buying NVIDIA up here. I don't think it's a sell so much up here. Although, if there is a lot of market weakness, NVIDIA has had a lot of great gains lately, and it could start to unwind just a little bit as people are looking to reallocate their cash and deploy it in higher yielding investments. Because what's the risk to reward on NVIDIA? Sure, we could go on another tear. Is that likely though? NVIDIA's already ran a marathon. You wanted to run another marathon? I don't know. Right over here in my M1 Finance portfolio, I don't care about this market drop. That's why I keep the amount that I keep invested. It's a comfortable amount for me. If this were something like 80 grand, I'd be freaking out a little bit more. That's why it's all about position size and investing, just dollar cost averaging, investing $50 a week. I think that's the way to go because you just ride with the market. You're very correlated with the market. And sure, if the market tanks or the market crashes, I like to actually buy a little bit more, invest a little bit more, and just otherwise invest that little bit as we're just creeping at all-time highs. So just looking in terms of NVIDIA in the portfolio, NVIDIA up 406%. Gosh, NVIDIA has been a beast and it pays dividends. The thing is though, is in terms of trading NVIDIA, even though it's, the chip sector is nice and strong, it's the leader in the space, it still can sell off. So just be careful on NVIDIA. I wouldn't be surprised to see NVIDIA at, 300, 295 even this upcoming week if there's broad market weakness. Of course, if the if the semiconductors, the SMH, is doing well and booming, then NVIDIA is going to do well. But even then, semiconductors, big reversal candle up there. We could sell off just a little bit more. Again, though, if the market stabilizes or goes sideways, then sure, NVIDIA could go sideways. I'm just not expecting big explosiveness out of NVIDIA. So being careful on NVIDIA. I'd love to potentially buy the dip at 305, see how we react there intraday. And I might be interested in buying the dip for a trade at about 295 to see how we react there. Otherwise, yeah, I'm just going to keep an eye on it. I'm really interested in NVIDIA down here at 230. Crazy, right? Maybe I'd be interested in NVIDIA at 280 if we got there this year, 280. That's where I'd buy some more equity and buy some more shares. Otherwise, for me, it's the flavor of the day. Well, I'm going to be searching for the flavor of the day, that is. So that is NVIDIA. Next up we got is Tesla, TSLA. And Tesla, still waiting for that buy price, down at about 900, maybe 880, call it. And I'm just going to clear the drawing set. There's a lot of muck over here. Basically, though, we've got on Tesla a high, sold some shares up there because I wanted to buy those shares back for a nice, good discount. Now I'm just waiting to buy the rest of my shares back at a better discount. The thing is, though, I'm not necessarily bearish on Tesla. Tesla's a beast. Look at how it's still high up after everybody selling their shares. Elon selling the shares. Wasn't it Elon's cousin or brother selling shares? Comment below if you know the true answer for that. Also, hit the like button if you are enjoying these monologues of technical analysis for the upcoming week. It surely supports the channel. So, Tesla over here, though. High, selling some shares. Boom, big drop. Then we made a lower low without a lot of follow through, and this is a jab. Why is it a jab? Well, most of the time, whenever you make a lower low and price is meant to drop, it usually continues to drop to the next support area. Well, the fact that we made a lower low probably stopped out a lot of people or trapped some shorts. That's what causes those jabs to reverse and squeeze higher. So Tesla did the H jab, call it. That's the H jab pattern, we'll call it from now on. Now, Tesla over here, as long as it holds the support, call it, 1050, sure, we can bounce, but I wouldn't expect a bigger bounce. Basically, if we're beneath 1050, we could reject and make that lower low that I'm looking for. It's tough to speculate what will happen. Maybe we find some support at that 1,000 again, but the buyers would probably start to get a lower high pivot into that bounce. Otherwise, though, on Tesla, if we started to, maybe this is a higher low and we hold that 1050, if we bust and go into a higher high and break out over 1,200, sure, we could break out to all-time highs. Is this a breakout style market? Probably not anymore, because overall weakness is going to have people worried and not taking those aggressive, risky breakouts. Or even worse, it breaks out and snaps back in. So just keeping an eye on Tesla for day trading volatility. Maybe if you're aggressive, you can short it underneath 1050. Be careful if you're going to short Tesla. But really, I'm looking to accumulate equity on Tesla at about the 880s and 900s area. And we'll reevaluate from there. And so next up we've got is Snapchat. Snapchat over here. Snapchat, big consolidation zone. Boom, fat breakdown. We talked about that insider selling millions of dollars of Snapchat before the earnings report, saving himself a nice cool 33% overnight. Snapchat, though, drop, a bear flag, but a lower high pivot straight into a drop. I've been saying Snapchat 47 to 45 is my dip buy zone. I think we got an alert at 47. I didn't take the trade, but 45 still stands. I think the low was what? 47.37? Yep, so far we're bouncing just a little bit off of 47.37, a little 4% bounce. I'm not thrilled about the bounce. Sure, Snapchat could be the play on a resurgence, but something is telling me about Snapchat, lower highs and lower lows. So lower high, lower low. Sure, we could make a little bit higher. Maybe we can get up to that 53 area. We're coming up to 53 if we're gapping above Friday's high. Call it 50. So Snapchat hourly and daily above 50 brings it likely to move higher and maybe test something like 54. And that has to deal with this resistance just over here. Notice how it's support, resistance, resistance, resistance. Okay, 54 is still that resistance point from the bottom side. So 50 is kind of our pivot. Above it, we can get up to 54, and beneath it, we might come down to that 45. And these are Weenie Academy requests. These are not actually trade setups or particular trade setups. Just real quick, if you guys remember last week, we talked about the dip buy on Mana USD, MANA USD. And on Mana, talked about how, hey, buy the dip at 2.87. Not financial advice. I'm not telling you guys what to do. But that dip buy right there, 2.87, that dip buy is up quite a bit. I think 2.87, almost, yeah, pretty much double your money. Yeah, you doubled your money if you took that dip buy. And I know I did on that trade. So be sure to pay attention to some of these setups. Mana still in a nice, good uptrend, higher highs, higher lows. Stay updated for a potential crypto stream moving forward. So that's all I have for today's video. Be sure to comment below what you're watching. Be sure to join the Discord, hang out, have some fun. Ask me about some charts. We can break them down and send pictures, whatever it may be. Send me some funny memes. And there's a lot of exciting stuff about to happen into the future. So thank you guys so much for tuning in. Get yourself a weenie beanie. Hit the thumbs up, hit the share, and let's get ready for an awesome, profitable week. Thanks for tuning in. See ya.